Good morning, this is Graham Bibby here from InstantStockResults.com. I wanted to speak to you personally today. Normally you just see a Camtasia of the stocks I'm looking at. I'm speaking to you now from my office here in the beautiful Paradise Island of Phuket. Many of you have just seen me on the TV on Bloomberg, CNBC, Reuters or BBC, normally in a pinstripe suit, tie, very formal, but we're living in a casual environment here. And sometimes that helps you to make your head a bit clearer. So I just wanted to tell you about the service. It's all about picking those stocks that have strong earnings growth, stocks that are outperforming the average market. So they're growing very, very strong. Maybe minimum 15% per annum, up to 30% per annum. And then we look at the PE ratios and see relative to the growth of the stock, how low those PE ratios are. That makes the stocks, in inverted commas, cheap. But cheap can get cheaper. So then I use my expertise of 30 odd years of trading the stock market, currency market, commodity markets, and funds and sectors, and using technicals for the buys and the sells. Over the last few weeks, the markets have been a bit difficult. So I really wanted to show you some of the things I'm looking at, do a bit of a global roundup to show you what's going on in the market. So what we're going to do now, we're going to pan across to the chart on my right, and then I'm going to point out some things to you on this chart just to show you where the trends are. So just give us a second as we zoom you across to the charts over on my right. Now we're starting off looking at the Dow Jones 30 Industrial Index. And the reason I'm starting here is the US stock market is the market that's leading the direction of all the other markets. That's not always that scenario, but quite often it is. And what the situation is right now is if the US stock market's up overnight, then the market's generally going up, and if it's down, they're all falling, especially if there's a strong movement. So it's important to look at this trend. We bottomed out here last October of 2011, and we've basically been in an upward trend ever since. Our first buys came on the market in 2009, when everyone said things were going to get worse. That was the best time to make profits. What concerns me recently is this overall downtrend here. These tops are falling, and that should have been the stop loss point there in the short term, and we've fallen below it to this point. Okay, this is the previous top. That becomes resistance, and then when we break above it, it becomes support. It fell down and found support. So the market had a strong day on Friday. It's had a weekday since then, and what we need to see is this moving higher to get any evidence that this market is going up. I am a little bit concerned about the market because I see a lot of leading stocks have actually been cratering, and I don't know why Asia and Latin America are falling apart at the moment. But at the end of the day, my job is to follow stop losses, so hopefully I'll show you that in a second. This is the Nasdaq. It had a huge movement from here. This is somewhere in the region of 400 points. So you could see a market correct easily 100 points and sometimes 200 points. So this has got to be the long-term stock level here. We've risen. We're trying to break through that downtrend and move higher. This is the US dollar index, because I want to give you a global view. So the dollar has been rising, and then recently it's turned over. The dollar seems to me as if it's in a bit of a downtrend. If we look at smaller company stocks, Russell 2000, it's a similar trend to the other ones. Stop loss here level not been broken, so it's fairly intact. You see the bottom here in 2011, very similar pattern. So, okay, all those are showing the same sort of trends that we've seen before. Now, if we zoom down here to, this is Asia ex-Japan. Now, this market had broken out of this trend line to the upside, but here at 60, they're giving a sell, and within, well, not even a couple of weeks, it's fallen from 60 to 55. That's almost a 9% drop. It's against what appears to be the fundamentals, but at the end of the day, the trend is your friend, so we have to go with that. And if we look across in Europe, this is a European ETF. The trend line is very similar. You know, we've got this downtrend. This needs to be support. Again, if I just show you how to put a few support and resistance levels on, quite easy. We just look where the previous resistance was. We draw a line across. So this was resistance 1, 2, 3, and WD GAN analysis says on the 4th attempt, generally speaking, you break through. We've gone through. We've come back to test that support level and bounced off it. So this support level is quite critical for the long-term trend of that market. If we then just have a look at Latin America, you know, it's did a swan dive. You know, the stops were broken over here. We went down, and then we tried gallantly to get a new uptrend started, and it failed. And then we came down, found some support at the previous support level, tried to rally, had another attempt at a new uptrend, but then we've gone to new lows, and this is what's happened since. It's down, you know, from that peak, it's down from almost 77 to 64, so that's nearly 20%. So it's quite bearish for emerging markets for some reason. You know, now I just want to switch you over to where we're invested. Let me just move this across. Doesn't seem to want to move. Okay. Let's have a look here. So we're in stocks with very strong earnings growth. And let's just have a look at a few of the stocks we've had. This is Yahoo. Late last year, November, the buy came at 16. The stock's currently 26. And unlike the rest of the market, which is in that phase, this has already started to turn around and continue its uptrend. So from 16 to 26 is a 10-point movement, which is somewhere in the region of just over 60% return, and that's in roughly 6 months. One of the other areas we've been, this is in diversified business services. This is a lovely little stock. First buy came back here in 2011 when the stock was trading at 15. It's currently 60, so you made 4 times your money. Another buy came last year here at 20, and it's 60. So if you put 100 grand in here, you've got 300,000 here. And unlike the other stocks breaking down, you see this is breaking to the upside. So this is how important it is to be in the winning areas. The last one I want to show you, because we don't want to spend too much of your time, is Visa. Now Visa gave a buy here on this breakout. We tried to break out, we failed and pulled back again, then we got an upward trend line, and then we moved to new highs, and then we got a new bottom here, a new bottom here. This is a signal of a buy. The stock, I think we bought it at 79 actually, around about this point, and now it's 179, and that is in somewhere like, well, less than 2 years, and it's up over 100%. And again, you see this chart has moved to a new high. It's not suffering like the rest of the stocks. So, you know, that's just a quick overview of what's going on. I won't take up more of your time. This is Graham Bibby saying, you know, please join us at instantstockresults.com. You can email me at graham@instantstockresults.com if you have any stocks that seem to be in trouble at the moment, or any markets. Because I know a lot of people out there are starting to hurt again. They're in the wrong areas. You need to be in the strong areas where there's demand for the stock. That's the only thing that's relevant. More demand than supply at a given price sends the stock price higher. Any reversal, like our recent sales at the end of last month out of Thailand and the Philippines, best 2 performing markets in Asia. But the trend reversed, we got out, and that is some 14 to 15% above where the market is today. So this is Graham Bibby from instantstockresults.com. saying goodbye, and I hope to see you join me very soon.